Hello, YouTube. The S&P went timber today after retesting its 50-day moving average, and it looks a lot like we're having a hard time passing this area. If we remember correctly, we have a green pocket, which looks very similar to our green pocket from before. So as we're looking here, it's going to be really interesting to see where we're going to go for the rest of the week. Where I want to start today is actually by talking today about the trillion-dollar companies because we now have the earnings out from Apple, Microsoft, Google, Amazon, Tesla. Amazon's down by 15% in after hours here, as much as negative 20 before. And what's so interesting is just that over the last week now, Amazon's going to be a lot more red. When we look at the board here, Meta down by 26. Oh my goodness. Apple's currently green. It's roughly here where it is right now. And it came in the line. But Microsoft disappointed, Google disappointed, Amazon disappointed. Tesla's actually green of the week now that Twitter's closed. We got a negative reaction after earnings as well. So there hasn't really been that many market leaders out of this group. And we're looking for the last dominoes to fall. We pretty much have them here. Apple and Tesla still holding up green in the last week, but everything else has been on a huge slide. So we were looking for a dramatic move lower, or the part of the wave here where we look to carve out our higher low. And that's what's happening here. The big question for me tomorrow is going to be what happens with the gap down. So with the gap down, are we going to gap down prop, gap down pump up, or gap down flush? I don't know. So if we now look at a different chart, I'm going to go here to our weekly one, and I just want to show you that there was some evidence we were going to be going down today. So when we look here to our 15-minute chart, it's pretty obvious that that bear market territory acted as a head and shoulders area here, where once we lost it, we just kept putting in progressively lower lows. So the high here, 382.5, right halfway between the 380 and 385 area. And then we reject here at 381.5. Just keep going lower, lower, lower. So that's really what happened. It's not that complicated. We went down, and it's because we have a bearish pattern here. We can also note that on ES, or the E-mini futures, that same chart was setting up. At the end of the video yesterday, we were talking about how we were going to get that decision here on the apex, right here, where the blue line meets the white line. And initially, it went up after the ECB and GDP numbers that came out. So we got 2.6% for GDP, initial jobless claims coming in with a beat. And this positive data was taken as positive. The ECB also raised interest rates to 2%. And net, we were higher after that. So that's how we got here to our apex. We were rocking that VWAP, and then we weren't. And when I look to another part of the chart, which is these upper wicks right here, this is really where it starts to get worrisome. Why? If we now look to where ES's 50 DMA is, it's at 38.59. It was 38.60 this morning. So this area right here at 38.50 to 38, roughly 70, where that also forms a head and shoulders, we just couldn't close above it. And we got a kiss of death. A kiss of death just means that we test the uptrend and then we can't go up. So if we now zoom in closer, what used to be support for us to be going higher, where we bounced, at a certain point, it just stops bouncing. So then we start going sideways inside this period here. And then we kiss it 1, 2, 3 times. And they're higher highs just because that's where the uptrend is. And then eventually, right, tries to reclaim the VWAP here in the 50, rejects again, reject, and then it finally just starts puking. And Amazon's the culprit for after hours for the justification on this candle, or the gap down we're going to see on SPY tomorrow. So that's really what it comes down to. It's not all that complicated. And since tomorrow is going to be Friday, what we want to focus on are going to be weekly charts. Before I forget, I do want to look back at our daily ones here, though. Why? It's been an excellent predictor. So if now we're going to be gapping down, I don't know. I think at a certain point there is value in trying to predict where we'll go. Instead, what is a better trading strategy is to react. So now that we got 3 tests here at our 50 DMA, at least initially, we're failing. However, if this is going to be the corrective wave before the midterm start next week, and we get the Fed and all that fun stuff, we're looking for an advance to end next week. Maybe not necessarily to start the week off, but by the end of the week, I would expect that we're going to be higher if we're repeating this green box. And what's so interesting is just that when we now look to year to date, we note that this is the only period here back in March where we put in all these green days. We put in 1, 2, 3, 4 in a row. Remember, we got hollow candles. So there's 4 over here. There's 4. There's 2, 3 over here. There's 4 over here. It's been really tough for us to notch back-to-back consecutive green days. So we're already up 10%, right? 10% off the lows. And we put in 3 back-to-back green days, and we were set for a 4th yesterday. And then we weren't. So with all these big tech companies basically shitting the bed, Amazon sinks 20%. It's now down by 15 as we looked at on weak fourth quarter guidance, which means next earnings season's probably not going to be good. So the stock is just stuck, right? That's what it looks like. We also got Apple, basically the only one like Tesla. So those are really the kings of tech is Apple and Tesla. They beat Wall Street estimates on revenue and earnings per share. Apple came up short versus revenue, but that's not really that big of a deal, just on iPhones. So with the data we got, with the PCE number tomorrow, the stage is pretty much set. I know we've said that a few times. You can say this is here, stage is set, whatever. It just means that the next move in this cycle is going to be a really important one. And we also talked about yesterday how QQQ already had those warning signs in terms of it already printing a daily lower low, and we're rejected. So QQQ rejected at the open yesterday, where we said that, hey, when people got a chance to get their money back, or at least most of them within this range of about 278 up to about 284, people said, yeah, I'm cashing out. Cha-ching, get me out. And if you're watching the video today thinking, oh my goodness, how did I do it again? It's just greed and fear and greed. And when I looked at this earlier today, it was as high as 59. We're actually into greed officially today. What does that mean? People got a little bit greedy, or they put their hand on the oven and they got burnt, and they're like, no, oven's not supposed to be hot. I'm going to touch it again. Oh, it's hot. And that's what happens. This has been an absolute tear for fear and greed. And people just got a little bit greedy. They're like, well, Apple, Amazon can't be too, or can't miss too, if everyone else already missed, or the move down will be more muted. And even into the close here on QQQ, we have our 200 weekly and our 50 monthly. Where are we again? Well, we're back inside at 266 and 272. So, right, stage is set. Where are we going to go? Well, as of right now, we're set for a close below our 200 weekly moving average once again. And that is so interesting because there's also going to be a gap on the chart. We have to be at least green tomorrow by about 2 points, or just under 1%, about 0.7, for us to just not close below the 200 weekly, right? If you don't look at those high time frame charts, that could be something you forget. So let's now go here to QQQ. And just before we do that for SPY, I'll be looking at the weekly high from last week, 375.45, as I mentioned before. And then for QQQ, this is going to be tough. Why? Well, as I mentioned, we were going to fizzle if we were going to keep going lower. And as of right now, we're set to open back down on the downtrend. So it's like getting tough here. This market's tough. So with that head and shoulders intact here, what we showed you on the 15-minute chart for SPY, that's pretty much everything we have for today. So come tune in with us tomorrow if you want to tune in for the final hour or watch the stream with us. Otherwise, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you.